Hi friends, my name is Kunal, and on this channel I talk a lot about mastering yourself and mastering investing. I study the strategies and behaviors of world-class investors, and I love to share what I'm learning and discovering. I'm also a random guy on the internet. So today's topic is focused on real estate, and I'm going to give you 7 reasons why your house is a terrible investment. And before I give you those reasons, I just wanted to provide a bit of context as to where I'm coming from. So I grew up in the real estate boom of India. It was an incredible bull run for the real estate industry between 2003 and 2013. And I saw a lot of my friends and family make money and lose money. I've also lived in the US and Canada, and generally I find that people are a little more obsessed with real estate and a house as an investment as compared to other asset classes. So I've been doing a lot of research and reading in this area, and my hope is that by the end of this video, you will make a better informed decision of whether to invest in your first house, your second house, as compared to some of the other asset classes. I'll assume that a lot of you already know sort of the perks of owning a home, but I hope you also consider these other factors that I believe make owning a home a terrible investment. So let's get started with reason number 1. Reason number 1 is that your house typically generates a low rate of return. So any investment that I make, I'm usually laying out some money today and hoping that I get more money in the future. We all want our money to grow. However, with real estate, we tend to look at the absolute returns of our investment versus the annualized compounded return. So what's the difference between these two measures? So let's say I buy a house and it goes up by 2x, so it doubles in 10 years. Maybe I think I made a good investment. Maybe you bought a house and it went up by 3x in 15 years. So when you look at the absolute returns, you give yourself a pat on the back for making a great investment. What we forget to do with real estate is look at the annualized compounded returns. And what you'll find when you do that is that how much did your house make per year as opposed to the overall gains. And you'll find that it's much lower when compared to a basic investing strategy, passive investing strategy, such as putting the money in the stock market. So the evidence, I looked at some evidence and I found that if you had put $1, and we have lots of data for the US, if you had put $1 in a simple index like Dow Jones starting from 1900 to 2017, that dollar would have turned to $30,447 compared to the dollar in real estate would have only grown to $161. So that's a phenomenal difference. I mean, there is no comparison as to real estate versus an index fund, a basic passive investing fund strategy. So this is similar to even in the Indian markets. We just don't have as much data, but if you look at the Sensex, you will find that the annualized compounded returns is much higher in the stock markets versus real estates. That said, 2003 to 2013 was an exception. The bull market for real estate in India was incredible, and it just added to this myth that real estate gives good returns for your money. The other factor, particularly in India, that we tend to argue with real estate is that rental income. So we say, okay, I invest some money in an apartment and it gives me some returns every month. But then the question again is, what percentage of return are you getting? And some of the data I looked at, particularly with rental yields in India, India has some of the lowest rental yields in the world. So again, that argument doesn't hold to make your house a good investment. So let's look at the chart here. So in India, the rental yield is on average is at a mere 2.4%. You look at the US, it's at 2.8%, which is not that much higher. You look at Canada, a little bit better, 4%, and then Indonesia comes at the top with just over 8% in rental yield. So if you compare 2.4% to even a basic fixed deposit at a bank in India, will give you much higher than that rental yield. Again, this is an average. It doesn't cover particular area, particular locations, etc. The point I'm trying to make with real estate, particularly residential real estate and a house, is that it generates low returns, and the lesson is that you need to compare your investment in a house to other asset classes before you decide to jump in on buying a house. All right, with that, let's move to reason number 2 as to why your house is a terrible investment. So, your house is one of the most illiquid asset classes out there. And what does illiquid mean? Basically, illiquid means that you can't convert your house into cash very easily. It's hard to sell. It often takes a long time, and sometimes it's nearly impossible to find a buyer. You might have to wait 3 years, 4 years, 5 years, 6 years. I've seen people wait 10 years to sell their house and convert that asset into cash. Now, this can be a particular problem, especially in India. I've seen a pattern where older people tend to have multiple properties but no cash in hand. And what they need most at the end of their lives, when they're retiring, is the ability to have cash in hand without necessarily working. Let's take a look at this source from RBI's Housing Finance Committee report in 2017. Here you see that only 5% of Indian household savings is tied up in financial assets, as compared to a staggering 77% in real estate. That is phenomenal. Again, it shows you that how many people tend to have a bulk of their assets tied up in real estate without the ability to easily convert it to cash. Now, building on this challenge of illiquidity is another reason why your house is a terrible investment, which is transaction costs. When you do decide to sell, and if you can sell your house, you find that with stamp duty, registration, other legal fees that come with real estate, it can cost you up to 10% to complete that transaction. Now compare that to the stock market and buying and selling stocks, for instance, just as a opposing asset class. You can buy and sell for as low as 0.25%. I tend to use Zerodha these days, which is a popular broker here in India. And regardless of your transaction amount, they have a flat fee of rupees 200, which works out to be just over $3, which is incredible. Like, there is, again, no comparison. When you do sell real estate, particularly a house, you lose even more money in transaction costs. All right, let's move to the next point. Reason number 4 why your house is a terrible investment. So a house makes the owner continuously spend money. So this can be in the form of maintenance expenses. So This is just ongoing maintenance expenses to keep your house going at a good standard. Then there's property taxes, which can be significant. There's also insurance costs. So in case something goes wrong, you need to buy insurance, particularly if you've invested a large amount of your money into a house. And then finally, repairs. So when you look at all of these category of expenses, you'll find that a house continuously eats into your savings, reducing your rate of return even more. Connected to this point of a house being expensive is that for a house, you need a big investment size. You can't really buy it in smaller chunks, like buying stocks or mutual funds or ETFs. This is because there's simply no way of dividing up a house. You buy the entire unit. It may sound obvious, but it is a huge drawback of owning a house. The investment size tends to be huge. Again, not only making it unaffordable, but also making it less flexible to own and retain. And with that, guys, my final point is that unfavorable tax rules. So with a house, you have to keep paying taxes each and every year, even after you've paid off your house or your mortgage at the end of 10, 15, 20 years. Now compare that to stocks. You only have to pay taxes on your gains, and the timing depends on the category of investment that your stocks fall into. Typically, there are two categories, either short-term gains or long-term gains. And either way, you're only paying taxes once. With a house, you're paying taxes each and every single year. So before I end, I just want to add a disclaimer that the focus of the video was residential real estate, particularly buying a house. Commercial real estate is a whole different ball game that I hope to cover in a different video. If you found this video helpful, please hit the like and subscribe button. If there are other reasons you think a house is a terrible investment, do let me know in the comments, or if you have different views on this topic, again, let me know. I'd love to learn with you, and I'll see you next time.